How quick do these Fridays crop up on us? They come round so quick. It's absolutely insane that we're sitting at the 17th of January already. And we're on for another webinar. I think it's the first one of the year. Is it the first one of the year? I think it is.
It's our second one, but yeah, first one we got.
Yeah, it's and already we're sort of 3/4 of the way through January already. It's absolutely crazy, isn't it? Morning, Amanda. We've got some people coming through. Appreciate we started it a couple of minutes late, so we'll just get cracking today, so that you guys can kick things off. So I know we're in for a busy session today. Everybody's looking forward to this one, so I'm excited. So again, we are thrilled to have you all with us for another Friday 10 a.m. webinar. It's a pattern, it's a routine, it's happening every week. We've got a really good topic today. The guys at Aspen are joining us again today. As always, there's a few housekeeping notes before we get started. The session typically runs for 45 to 50 minutes, so hopefully you'll all be on your way by 11 o'clock. Feel free to use the chat function or the Q&A section as well. We'll get those questions answered as quick as we can. And just stay with us. If you've got any questions, if you want the guys to elaborate on any particular part of the presentation today, just vocalize it, and I'm sure they'll be more than happy to step in and support you all. Just moving on, if my screen allows me to do so. There we go. So to get things started, I'm Lee, co-founder of the Financial Planning Club. So we offer a tailored membership for business owners through the club and our free WhatsApp communities, which is the home to over 1,300 members. So whether you're here today as members or just exploring the club and Aspen, we are very glad to have you with us. If we talk about the club, there is literally no better time to become a member of the Financial Planning Club. Q1 is absolutely packed of value for our members. It's full-on planning. What we do in Q1 affects our outcomes in Q2, Q3. So it's all about planning in Q1. So we're either crafting bespoke 3-year business plans or we're updating existing ones. We're developing 12-month roadmaps. We're breaking that down into 90-day sprints with accountability at every step of the way. It's going to be a great year, and we need to start it off absolutely with the right momentum. We've got our CEO roundtable happening this quarter as well. We've got our face-to-face event kicking off in May. So come on a journey with us and our club members. It definitely is going to be a great 2025 already. Don't forget, as always, our business scorecard is a fantastic tool that helps you identify areas of your business that you might need to pay a little bit of attention to. We also send you back a bespoke plan as to how the club, our members, our collaborators can help you and your business. So we need to understand that so much of our time is spent working in our business rather than on our businesses. Taking a step back, assessing and reflecting is key to any kind of growth and improvements. We'll email this out to everybody at the end of the session as well, so you can dive in and see how it works and see how it can make a difference in your business. The community, now this is where it all started a few years ago. Hi, Lewis, you're with us. Your video's working.
Yes.
So the community is where it all began a few years ago. We're now sitting at 1,300 members. So we host thriving communities within WhatsApp. It is split into specialized groups to keep the conversations really relevant and focused. We've got an individual group for financial advisors, your wealth advisors. We've got an individual group for your mortgage advisors, your power planners, your ops managers, and individual groups for business owners. Being a part of a larger community, as you all know, can be very rewarding. It allows you to exchange ideas, face challenges together, but most importantly, it connects you with your peers. You can get instant responses from any questions or challenges that you're facing, and you'll be able to help others in the industry as well. So it's a really cool place to come and hang out. So if you're not involved yet, you can get involved under our website. And I know there's a few links going in the chat as well. So feel free to come and hang out in one of our communities as well. Touching on our collaborators, this is expanding all of the time at the minute. We are partnering with some really, really cool and exciting firms in the financial planning arena. We're very selective about who we partner with at the club. Our missions do have to align, and that is to help drive the industry forward. We love the amazing support, ideas, and input from all of our collaborators, from platforms, compliance, operational overhauls, tech integrations, AI, recruitment, everything in between. All of these fantastic firms play and contribute to our club members. So a big shout out and a big thank you to all of our collaborators. I briefly touched on it at the beginning, but we are back on the road again, May the 8th. We are in the centre of London. There's a huge focus on making your business future fit. It's about having a real growth mindset. So our face-to-face events are exclusive for business owners and our club members. Our goal is for members to leave exactly like they did last time, and that's feeling enthusiastic, stimulated, energized, and just inspired to push boundaries this year. And that's really important. As always, we will have a few slots for non-members to join us on the day. So look, at the end of the webinar, there's always a feedback form. It's always important that you share feedback with us for club purposes and for Aspen, the guys that are going to be presenting to you today. But on the feedback form, there is a section that will state, are you interested in our face-to-face event in May? As soon as the agenda is finalised, we're putting the final touches on that as we speak. We'll get the full agenda out and over to you guys, but it is quite restricted. We are looking at a cap of around 50 to 60 business owners this time. So just let us know if you'd like some more information on that. Webinars that we've got coming up. Thankfully, the guys are giving me a day off next week. We are out next Thursday with Fundment, the team over at Fund. We've got a charity gala. I think, guys, Aspen, you're coming with us, right?
Yes.
So really good event, really good charity gala next Thursday, black tie event. So thankfully, the team give me the day off on Friday. So thanks for that. So the following Friday, the 31st of January, we are with Octopus Money, Julie Greenwood, and we are maximising sale value and serving smaller clients effectively. That's going to be a really cool webinar as well. So same again, 10 o'clock, Friday the 31st. And then we're back for part 2 with the guys over at Way Trustees, inheritance tax planning, what now for pensions. These are always very good sessions as well. So again, that's Friday the 14th, Valentine's Day, guys, Friday the 14th, don't forget it, 10 a.m. All right, as Andrew sorted his hair out there. That was timed so well, Andrew, that was. So both webinars packed full of practical takeaways and industry leading insights. So make sure you sign up. And if you can't attend live, as always, you will get the recording. So feel free to head over to the webinar page on our website to sign up. That's enough of me, Aspen. We're here today with Andrew and Lewis. So just a quick introduction before they kick off their content. Andrew founded Aspen in 2019 with the aim of transforming the MPS market through a best-in-class digital experience for advisors. And I believe you're going to see snippets and parts of Aspen's tech throughout the presentation as well. And if we don't see enough of it, then feel free to reach out to the guys to find out a little bit more. Lewis has a background of working with some of the largest names in the financial planning, the financial advice industry. Lewis joined Aspen in 2023 with a shared vision to build and grow something completely unique that involves financial planning. Guys, thank you for joining us today. Over to you.
Thanks, Lee. Appreciate that introduction. And morning, everyone. Great to have everyone here today. So I think I'll just share my screen if that's allowed.
There we go. We're good.
Good to go. So yeah, today's session is focused on building a high net worth proposition for clients, for those that are in the high net worth bracket, and how to think about that. That may be slightly different to a lower value or less complex client. So that's the kind of aim of today's session for us. I'll just do a little introduction, just beyond a little bit for what Lee did. So yeah, I'm Andrew. Started the Aspen business about 5 years ago. Have been in the industry about 18 years now, between wealth management businesses, a large wealth management firm, and was head of fund research for Williams de Brough in London for a period of time, and then joined a small firm in the West End of London in 2012 to 2018, where we built and ran MPS solutions to before setting up the Aspen business in 2019. Lewis.
Yes, as they said. So, my name is Andrew Spence. I'm head of strategic partnerships. I've worked at some of the largest financial planning businesses in the UK. So, some of which obviously you may be familiar with in the platform world, being Aberdeen, and for those of you that might not have heard it, one of the largest high net worth wealth managers in the world, actually called Fisher Investments. And yeah, came from a background of dealing with some of the largest clients there and building effectively a high net worth service for them.
That's So, just briefly for those that don't know about Aspen, we are here to try and move the NPS landscape forward a little bit. There's, I wouldn't set up a business in a very competitive landscape if I didn't feel that there was scope for progress. So, I would say we set ourselves apart in kind of three main areas. One is we offer probably the most comprehensive range of portfolios on the market, and you'll see why this can perhaps bring some value, looking beyond perhaps a sort of one-dimensional view of risk to more two-dimensional view of holistic kind of investment solutions for clients. Efficiency. So Lewis will showcase our tech a little bit, but a good technology experience is kind of critical these days. The simplicity of that and the quality of the output. So we provide a really streamlined experience for advisors using our portfolios. And then finally, service is one of the things that I believe incredibly strongly in. And with working with Aspen, you get direct access to the investment team for anything related to the investment part of your business. So we're here to support you 100%. Consider yourself as an arm of your business when working with Aspen on the investment side. So those are our three key areas of difference. And we've been growing well in the market over the last few years. So in this session for the next half an hour, 40 minutes or so, we're going to be focusing in on the high net worth client segment. So we'll sort of chat through what private banks do at the moment and how a financial advisor can compete with the private bank side of things in terms of what you offer to clients. Introducing and discussing core and satellite investing. So a little bit of a move beyond just the risk-rated portfolio to see how we can combine portfolios to create a custom solution for clients. And then Lewis will showcase how you can create a nice frictionless experience for that output to the clients. And then Q&A at the end, but it's always good to have a chat throughout. So if any questions come up, Lewis and Lee will monitor the chat function. So please do ask questions along the way. It is good to have that interactive discussion. Okay, just moving in along so far. I just pop this in because it's somewhat relevant to this discussion. So this is the journey of Aspen so far. So the business, started about 5 years ago by myself and my dog, Rusty, who's enjoying the bacon rolls next door today. But to start a business in asset management, as people will know, there's quite high barriers to entry. And so I had a vision of what the NPS solution could be, but I needed a home to sort of get going in. So I asked her, I had some good connections in Edinburgh, and a few people were keen to get involved. But in the end, I joined forces in the early days with a company called North Capital. And North Capital are a multifamily office based in Edinburgh, look after so-called ultra high net worth clients. And they were seeing with UBS and CAS and things like that it was quite a similar sort of solution that they were getting from these parties. So I think the plan there was to start to bring things more in-house and create an investment solution for them. So when I started Aspen within North Capital, we actually then created an ultra high net worth solution for North Capital, which now mirrors the Aspen business. So there's some relevance to that. So quite a lot of experience in terms of what ultra high net worth or high net worth clients need in that regard. As the business has evolved, we're now sort of fully separate and directly authorized entity, and you can see a number of people having joined the business in the last few years, and we're well established and growing now in the market. So building a high net worth proposition. So that's the focus of today. So I think for most advisors, you will typically have three client segments. One is the accumulators, or those with relatively simple needs. Second is the high net worth client bank, or those with more complex needs. And third is those in retirement or approaching retirement, where you hope to have a central retirement proposition for them. So typically these kind of capture most clients within a financial planning business. So today we're focusing on segment 2, which is the ultra high net worth or more complex needs client base. So what is the typical profile of a high net worth investor? So we would usually say it's investable assets of more than £1 million in terms of quantifiable high net worth. Ultra probably comes in the 5+, but high net worth is probably in the 1 to 5 camp in terms of if we want to bucket in that respect. They may have more money than they wish to spend in a lifetime, so they're quite likely to see longevity or legacy as part of their planning process in terms of passing on wealth. They can have quite unique risk characteristics depending on how the money has been acquired. So if it's inherited wealth versus wealth that's been accumulated through a business or their own efforts. And it's interesting psychology on this. What you tend to find, and there's kind of arguments in both camps, so it's not an absolute fact, but what you tend to find is those that have made their own wealth tend to like to preserve that more and be slightly more risk averse than those that have inherited wealth, because those that have made wealth know how hard it is to create wealth. So that's typically what you see, but it's not always the case. And they will, in most cases, have slightly more complex requirements in terms of what they need, and certainly more tax implications that are going on with a high net worth investor. So these are sort of the character traits of a high net worth investor. In terms of the solutions available, obviously we've seen NPS grow rapidly in the last 8 to 10 years. So if you are using an NPS solution, sometimes it's a little bit of a square peg in a round hole for high net worth investors. As I said at the beginning, if the product is just a range of risk-rated portfolios and your client has other needs in terms of tax planning, other preferences, it's quite difficult to kind of fit them into one risk portfolio. Where Aspen comes in is our breadth and depth of portfolios, means you can combine the building blocks, use the building blocks of model portfolios to create a nice custom solution for a client. And we'll come on to discuss that in due course. It might not be Aspen, but just the ability to use a range of portfolios with genuinely different characteristics can be useful. So next stage is competing with the private banks side of things. So yeah, as I said at the beginning, I have a very lived experience in terms of what private banks offer in the high net worth or ultra high net worth space. And whilst a private bank or a wealth manager that offers services to high net worth investors can offer some extra benefits such as cash management, lending, FX, or access to private markets, the actual core element of the investment solution, so the multi-asset portfolio, is really very similar to what you would get in an NPS. Quite often, a little bit worse, if I'm honest, because I've been in a wealth management business that look after high net worth individuals, and I've experienced an advice firm that looks after high net worth and ultra high net worth. So I've seen what the investment solution is, and I've not been terribly impressed. It is very similar to what you would receive in a model portfolio, albeit at significantly extra cost. It is largely smoke and mirrors, in my view, in terms of what you can receive from say a traditional DFM or a private bank on the investment side. So don't be fooled by that. At the end of the day, the business are trying to get people into into risk segments, and so you will find, whilst that might feel around smoke and mirrors that someone's getting something bespoke, they're actually going into a centralized model. So there are a number of misconceptions, I think, about what a solution for a high net worth client needs to be. One is that it needs to be complicated, so you can sort of bamboozle the client or justify higher fees. I'm not saying the advisor, more the provider of the investment solution. It does not need to be complicated. It does not need to be expensive. You do not need all the bells and whistles in most cases. So it doesn't need to be a very expensive solution. It doesn't need to include a range of complex and varied products. I've seen this time and time again where it includes single stocks, structured products, hedge funds, and private equity. And invariably, the return profile over the longer term is lower than just a sensible managed portfolio solution. So it does not need these things, despite a private bank suggesting that it might. And nor does it need a dedicated investment manager. Financial planning has come a huge way in the last 10 years. I'm sure everyone on this call is perfectly capable to look after these things. If you work with a sensible MPS solution that can support you on the investment side, you have that support. So you do not need to pay extra for that investment manager and things. So what does a high net worth investor, in our view, really want? Like everyone else, they want a simple, clear product and service. They want to understand what they are invested in and why they're invested. They're just like everyone else. We like simplicity. We like to understand what we're invested in. So bamboozling them with other things is not necessarily a good idea. And I'll use an example of a client that I used to look after about 8-9 years ago. Former head of MI6, his CV was unbelievable. I was very nervous when I first met him, and his experiences, his contacts, and the people that he's, the pictures with Hillary Clinton and Tony Blair and all these sorts of things. It was quite intimidating. And then when we got down to it and talked about investments, I realized that he didn't really know anything about investments, and so you are the expert in the room when it comes to high net worth investors, and they trust your guidance, and they want to be able to understand what it is that they're investing in. I think a high net worth investor wants the feeling that they are getting something personal. I do think there is that there with the high net worth investor. They're probably not going to be satisfied if it's simply Vanguard Life Strategy 60, albeit a perfectly good option. I just wonder if that's not going to be enough for them. So I think it does need to be a little bit more than just one line item or a very, very simple portfolio. It needs to perhaps have a little bit of personalization. And service, I think, needs to be very high for a high net worth investor. They will be being attracted by other parties, and so they will need good treatment in terms of regular meetings and these sorts of things. So when it comes to then finding a solution for a high net worth investor, there are a range of options available. Clearly, there's the traditional discretionary management or the private bank. This is where quite a lot of assets are still attracted to. They can do specific things, as I've said. They can be quite useful in the tax planning. So if someone has cherished holdings, very particular preferences and things like that, a traditional DFM can be a reasonable home for that. But as I said, it is largely commoditized now on the investment side of things. But yeah, they can offer some extra things. So there is still an option for clients that have very specific needs. You've got multi-asset funds out there, so you can blend a few multi-asset funds. Again, it might be a little bit on the simple side, but it is certainly a reasonable option. Can be quite useful if there's CGT issues, if you just hold a few line items of multi-asset funds for any untax wrapped element of that. But as I say, optically, there's not a huge amount to talk about when you're looking at a multi-asset fund. Next is MPS. So obviously a growing area of the market. And there's two options here. You can do the advised approach where you select the assets, or you can outsource it, which is obviously becoming increasingly popular. And there's a lot of choice and options there. And then finally, which is quite relevant for high net worth investors, there are ancillary options that you can consider. So potentially alternative fund solutions. You've got businesses like Ruffer out there, potentially structured products, absolute return. Less popular these days, particularly structured products and these sorts of things, but that is still an option to kind of sit alongside if you wish. PE is an interesting one. My view is that the industry is not quite there yet on PE to make it easily accessible, easily understood, and more liquid. I think when it is, which I think is probably 1, 2, 3 years away, I think this could be an interesting area for high net worth investors, and an area that we're going to be kind of looking at, because private equity does improve diversification, but the barriers to entry and the admin required is still too high, in my view, at the moment. But a lot of work has been done in this field, so watch that space in the future. Certainly something that is being used at the moment is VCT, EIS, AIM, and these sorts of things. So that can, obviously continue. So those are sort of options for a high net worth investor. So that's a bit of background. Now we're just going to come into the MPS landscape and talk a little bit about core and satellite investing, which is something we kind of, quite frankly, pioneered in the MPS space, and has been very popular. And North Capital have a lot of assets that operate in this way, which appears to be working well for them. So I'm just going to kind of give a tiny background on what I mean by core and satellite investing. So the core portfolio that we would consider is what we're quite used to at the moment. So your 60-40 portfolio, as you go down the risk spectrum, bonds increase. As you go up the risk spectrum, equities increase. So that's what I would consider the core portfolio. So something that we're all quite familiar with. Now, satellite portfolios are something that can sit alongside a main portfolio that can offer quite unique characteristics that might be useful to create a bespoke solution for a client. So rather than just simply going up or down the risk scale, we can now go two-dimensional and look up and down the sort of objective scale side of things. So we've got our cash plus portfolio. We've got our gilts portfolio, which is really popular for sort of high net worth, high rate taxpayers, because you're getting large of the 4.5%. That's largely tax free at the moment. Very little volatility in that. So your gross equivalent yield if money was in the bank is about 7.5%. So it's a really nice option for those high rate taxpayers at the moment. Capital preservation portfolio, Four Seasons portfolio. That's sort of all weather strategy. High income delivers a yield of 5 or 6% at the moment. And then for those that want a bit of punch in their portfolio, global mega trends and smaller companies. So if a client says, I've got this 100K, I'd really like to kind of push it out there. These are their options. These are options there. So I'm just gonna, now we've kind of given that background into the core and satellite, I thought what would be useful is to kind of do a sort of lived case study of a high net worth investor. What we would see as a typical high net worth investor, and how you might want to use core and satellite investing as part of that. So we will discuss the client's circumstances. So let's say they're 60 years old, they've sold their business, they're still doing a few projects, still got a bit of income coming in. They're in good health, and we've done a risk profiling exercise, and they've come out as medium. Their assets, they've got total investable assets around 2.25 million, so they're a high net worth investor. They've got 1.5 million in the pension, they've got 500K of ISAs, and they've got 250K of cash in an untax wrapped environment. Their requirements are they have short-term cash needs, so they want to have that liquidity available. They do want to minimize tax as much as possible. They want to cover their lifestyle. They have a good quality lifestyle that they want to lead into their retirement, but they want to ensure the longevity of their pot and potentially leave some legacy to the children. So that's, I would say, a relatively typical high net worth investor client. Obviously, there'll be variations beyond that. So the next stage is then to simplify that so that you can kind of bring the assets into three buckets, we think. And this is learned experience with North Capital, which is working very well, and what the private banks tend to do in terms of how they bucket assets for high net worth investors. So there's three pots that they tend to look at: liquidity, which is your immediate cash needs; lifestyle, which is aligning the strategy with the client's desired way of living; and then longevity of the pot, as well as including any legacy. So those three L's are typically how a sort of private bank would operate. The segmentation of assets for a high net worth or ultra high net worth investor. And you can also look at time periods for these three pots. So cash needs is typically what you need for the next few years. Your lifestyle is then the sort of time beyond that, 5 to 7 years. And then beyond that is your longevity pot. So that helps kind of frame the allocation of assets in that way.
Just on that point as well, this is something that we keep coming across time and time again. Although we are talking about high net worth clients in particular today, and this sort of like bucketing approach with those three main pots, we do see this now being adopted across the board. It's being adopted for people's centralized retirement propositions as well. So for clients that maybe have lower wealth that are in retirement, this has proven a really, really popular option, especially when it comes to things like sequencing risk, managing multiple goals, different time horizons. And also, this is the other thing that we've seen actually with a few firms is just because a client doesn't necessarily have the net worth doesn't mean they don't necessarily have complex needs, and they could potentially benefit from something like this as well. So although that we're talking about this today about a high net worth proposition, how you compete with the private banks, effectively what we're doing with this is saying, let's take the wealth management strategies that the private banks, the wealth managers are using out there for high net worth clients, and now let's just make it accessible to the masses and really give more personalized investment recommendations to people without having to, say, go through sort of strenuous processes and portfolio building yourselves or pay extortionate fees for doing so.
Yeah, agreed, Liz. So let's build the solution for this particular client now. So this is the sort of segmentation of assets that we're looking at. So for the liquidity pot, we're gonna use the Aspen building blocks of portfolios here, just as an illustration. Other providers are available, although they don't provide satellite portfolios. Don't know why, they don't. Liquidity, we're going to use in the general investment accounts. We're going to use the Aspen Gilts portfolio for 250k. So this is largely tax-free. The Gilts portfolio, you get 4.5% or so return at the moment from that, which is largely tax-free. So it's ideal for short-term liquidity, and so it's daily liquids. Really nice kind of solution in that. So that takes the cash requirements and the tax elements there. In the lifestyle element, we're going to look at the ISA here. We're going to use the Aspen High Income portfolio. You get a yield off that of around 5 or 6%. So that can be paid out tax-free to help complement the standard of living. And then the capital, hopefully over the medium term, will keep pace with inflation. So that's a nice option there. And then for the other 250,000, we're just going to use a balanced portfolio. We're going to use the Aspen Balanced Core portfolio. Keeping vol under control with that, looking to generate, grow that ISA pot, but also if you want to sell some of that down, it's an option too. But looking at that 6 to 7% over the medium term, so a pretty stable pot, and using the tax element of the ISA quite well there. And then the pension pot, which is the bigger pot, which has a longer term time horizon. You can go here somewhere that's probably a bit higher equity content. So here we've gone for the Growth Passive Plus portfolio. There's no reason to have excess costs in this part of the portfolio. So go with something relatively low cost and just look for that long-term growth, because the time horizon here is sort of 8+ years. So you can weather a bit of volatility with this pot. So what you can see here is we've built a sort of custom solution for this client using the building blocks of model portfolios, and the all-in cost for this is about 0.39 for this blend of portfolios versus a private bank or DFM, which would be well over 1%. So you're creating a custom solution here for the client, which in my view is kind of better than what would be provided by a DFM or a private bank at a third of the cost. So that's kind of how you use the building blocks of model portfolios to create that solution. I'm just going to pass over to Lewis now, who's going to kind of demo that for 5 minutes in terms of how you build that in the Aspen tool. So we're just going to kind of show you that.
Yeah, brilliant. Thanks, Andrew. Let me share. Can you see that okay?
Can now, yeah.
Yeah, perfect.
Yep, all fine.
Yeah, so this is something. Yeah, perfect. This is what we've provided. This is what we basically provide the firms that we work with. So it's a free bit of tech that we provide our firms that want to use the Aspen portfolios. And the whole point of what we're trying to do is say, right, well, the core and satellite investing or bucketing approach, whatever people may want to call it, sounds like a really good principle, but how can you actually streamline investment selection itself in the way that the client feels that they've got something that's tailored for them? You haven't had to increase the amount of time spent building the portfolios or doing your research, wherever it may be. And you can just do it in a really repeatable way that if you are doing this for 1 client, 10 clients, 100 clients, or whether you've got even multiple financial planners in your business, It's a way that actually is just a repeatable and robust process that you can follow for everyone as well. So there's 2 journeys you can go through on this tool, and the tool itself is actually white labeled for every firm we work with. So we do that as part of the service as well. But the 2 of the journeys we can go through is portfolio discovery, and what that does, and to Andrew's point earlier when it talks about clients having more than one potential need, is saying, well, based out of all of the main solutions, whether it be passive, blended, income, sustainable, whatever it may be, what is going to be the best solution for a client? And it really helps narrow down that in a really streamlined way. But today, because we're just going to go through portfolio selection, just keep it nice and simple. Portfolio selection is basically, you kind of understand what you wanted to do already. So the example that Andrew gave us just a minute ago, and we're just basically wanting to just model that and just give the client a nice client-friendly report so they've got something that they feel is tailored to them. And we can see what the impact of blending portfolios has on the client's aggregate risk and costs. So congratulations today, Lee. You're going to be our ultra high net worth client.
Happy days.
I'm sure you get lots of phone calls after this.
Yeah.
So all you need is name, email, that's it to get started. And then what we'll end up doing is we're going to give this journey a name, and it can be absolutely anything you want. So you might just want to call it, actually, Lee, this is going to be your wealth planning journey. So for some people, again, it could be retirement, it could be generally whatever you want. So we're going to start building the tax wrap as we spoke about earlier, the ones that we're going to want to start doing some recommendations for. So if we then looked at the pension as the starting point, I believe Andrew gave a figure of
so
1.5
million for the pension, ISA 500,000,
500,
and general
and
investment
GIA
account.
250.
Yeah.
Cool, perfect. And then what you can do as well along the way, you can actually start to add notes on this system. So you might want to put, for example, pensions consolidation of X amount of pension schemes you've had previously. ISA could include like a new contribution for the tax year. It could be absolutely anything you want to put in as part of that. You then choose the risk level. And one of the things that we provide on the tool to help demonstrate to clients what it actually means to be a certain risk level is this historic returns chart. So you can have a really interactive discussion with a client around risk versus reward. So you can toggle on and off things like different world events. You can show market downturns, and you can just have a really interactive discussion with a client around what it means to be a medium risk investor versus high risk, whatever it may be. You can download these charts as a PDF. And as you can see in the bottom left-hand corner, it will automatically pull through as well the starting value that we're going to be looking at for this particular client. So Andrew mentioned earlier, this client in particular is going to be a medium risk investor. We then said, actually, for the main pension pot, we're probably going to go with the sort of passive plus portfolio. So predominantly money market, predominantly low index funds with tactical asset allocation as well, just to try and protect smoothing of returns. And what we're going to try and do here is now model this in a way that we can see what impact blending those satellite solutions that Andrew's going for a minute does to the aggregate risk and aggregate costs of the portfolio. So we just said, actually, to begin with, we're going to assign the pension pot the growth passive plus, because we're going with lower risk options for the other portfolios.
Lewis, can I just pause you there for 1 second?
Yeah.
So within the tool, so you can simply, going through a normal journey, you would potentially just apply that. This would be the traditional way of doing things, would be to apply the balanced passive plus portfolio. That's what we've chosen for, apply to all. What Lewis is going to show you is that we can do more, we can tweak that, as I illustrated earlier. You don't need to just these days just go into the one strategy.
Yeah, exactly that. And this is what you can see here. So we've started off by applying portfolio to all. And because as clients are balanced risk investor, we can see that actually the acceptable range of risk is somewhere between 2.5 and 3.5 out of 5. And we've got a current aggregate cost of 0.33 because it's just invested across the board at the moment. So what we can now start to do, if we started to go down to the individual account first, perhaps, and let's get rid of the balanced portfolio like we said we were going to do, because this is going to be the gilt portfolio instead. What we can see is by allocating the gilt portfolio to the individual account here, by putting £250,000 in it, it's actually started to reduce the client's aggregate level of risk and also start to reduce the client's aggregate cost as well. So when I go up to the ISA, and the two solutions that we're going to be doing for this is the balanced core range. So if I go into balanced core, we're also going to add on top of that the high income portfolio, which is one of the satellites, so paying that natural yield. And if we split that into percentage of the wrapper, just 50-50 nice and easily, again, we can see that it's broadly kept the investment risk the same. However, because we've now started to use some high cost options, it has increased the cost slightly as well. So now we've got the facility to do is say, well, because this has reduced the client's risk appetite somewhat, we can actually look at changing the main portfolio. So if we then looked at the main portfolio here, and we said, let's see what the impact of a growth portfolio would do. As you can see, you can now start
go with growth passive. There was the final option.
Oh yeah, growth passive. Here we go. Perfect, done. Yes, as you can see, it's now still kept the client's aggregate risk level within the acceptable range. However, it now means that the client's got potential long-term opportunity to maximise their growth on the long term for that longevity pot we were speaking about. And it's still kept that bespoke solution that we were looking to build under 40 basis points as well. So 0.38 all in. So the client now feels that they've got something that's more personalised for them, and you've been able to build, using the building blocks of model portfolios, a more personalised solution. And what the system will do at the end of this is produce a white label report for the client, which will basically document and record the entire journey we've just gone through, and also whether you've decided to add any notes along the way. So ones that we mentioned earlier is a good example. It will record those notes for you. So you can effectively give that to the client and say, here is your now new personalized recommendation. And it then talks through about how we work with you as the financial planner, how you work with a client, what a managed portfolio service actually is, portfolio types we're looking to do the recommendations for, portfolio style, risk profile, recommended portfolio, and then it's got the fact sheets at the end as well. So something that's genuinely personalized now and tailored to the client, but we haven't tried to overcomplicate things. We've just kept things really simple and made sure it's easy for them to understand why they're in these particular solutions. And we're trying to move to this more sort of goal-based planning environment as well now. And you've done that in about less than 10 minutes. So just really trying to keep things simple and streamline efficiencies where possible as well.
So the final step would then just to agree that with the client, and then to go onto the platform and plug into the respective portfolios. So it's quite a nice, clean solution for high net worth clients. So that's kind of us, Lee, in terms of the kind of elements of what we're wanting to kind of just chat about today. Very happy to take questions or talk more around any particular point.
Yeah, no, it's a good presentation, guys. I loved it. Loved the little demo at the end as well. It's always nice to bring this stuff to life, isn't it? And people get it firsthand, because it's all great. We sit here and talk about great tech and efficiencies and slickness and time is money and how we can save so much of that. It's nice to actually see it in full swing, if you like. So for the people that are hanging around at the moment, if you've got any questions, then please fire away. Ask any questions that you've got whilst you've got the guys here. If you want to see any part of the tech again, or if you want Andrew to elaborate on any part of the presentation, again, look, the floor is yours. Ask away at any questions. If not, as mentioned, feedback's always important to us. At the end, when you leave the webinar, you will be asked to give us some feedback, the good, the bad, the ugly. We're old enough to take all of it. So let us know how you feel today went. That'd be really, really nice. And we'll send you out an email as well with the contact details for everybody as well. So any questions, please let me know. Is there any tips on blending small caps and mega trends, is a question that has come in.
That's interesting. So yeah, megatrends is the 4 long-term structural themes of technological innovation, climate change, resource scarcity, shifting global power, so a bit of an Asia bias, and demographic and social change, which is a big structural theme. So there's a bit of a healthcare bias and infrastructure bias to that. It's clearly done well over the last few years. And yeah, it actually blends with smaller companies quite well. So the small cap portfolio is trying to play into that long-term theme that small caps tend to provide. Probably not in the last 10 years, but it's been mega cap led. But over a very long time period, small cap tends to have a premium in terms of return to large cap, and so they actually blend each other quite well in terms of what they do. So kind of a 50-50 blend would be good. A good starting point for these two portfolios, because they complement each other very well. So the small cap portfolio is actually leaned into active funds. So we choose what we believe to be the best in class regional active funds. There's pretty strong evidence that active management can bring value within smaller companies. Emerging markets and smaller companies are the two areas we think there is scope for value to be brought in active management. And certain areas of fixed income as well. Yeah, I think a 50-50 blend kind of works quite well with those two.
Brilliant. Anybody else? Any final questions? Last orders. Other questions coming there.
Oh, I think Adam. Did he say?
Yeah.
Do you
market
updates on markets? Thanks for the question, Adam. Yes, we do. So we provide a regular monthly update to clients. This is actually not, so everything's delivered in the brand of the advisor firm, really nice and clean and smart. And we provide a monthly market update that is actually neutral. So we don't say, oh, for these reasons, we believe you should be underweight US equities or whatever. We keep it neutral so you can use it across the firm. So this is sort of what it looks like. So the January one, so it's released within 2 business days of the month end. And it covers what's happened in the month. And then we do a Q&A on the second page, which will be key things that a client would have been sort of asking about during the month. So we try to keep it relevant and useful for the clients. The other thing that we provide, if something major happens, like for example the US election, the budget in the autumn, we'll write within 24 hours. We'll write about it, and it will be sent to your email. So yeah, again on the service point, it's a big thing for us. We want to provide useful value add support to firms. So yeah, we're pretty hot on the market updates.
Yeah, I want to try and do it. I mean, I definitely have as well, but we've seen some really horrendous examples of market updates that investment managers think should be sent to clients. And some of these are like 20, 25 pages long. And you think if a client reads that, I mean, they're going to get bored, number one, but also they're probably going to end up having more questions instead of it really sort of easing their mind. So what you want to do is just make them really live and breathe. So actually trying to really sort of settle clients, especially when there are things that are topical happening as well. And just trying to make sure that it's really easily digestible, make it relevant. And also, we discussed core and satellite investing today. The whole point is people blend solutions. Our market updates are literally just talking about the markets. It doesn't talk about our views and where we structure the portfolios. So if you want to use our market updates alongside us and a number of other different investment solutions, you can still do that because it doesn't talk about the Aspen portfolios at all. It's just a generic market update that you can provide. Yeah, I think we've spoken with a few firms recently, and I think getting charged about £175 a month for a market update, which can be obviously quite steep, especially if you're relatively new or sort of starting out your business in the sort of first sort of 5 years. So yeah, just leaning on your investment manager to actually provide them updates free of charge would be so much more cost effective for a lot of people.
Absolutely. Sounds good, guys. Sounds good. Well, as I said, we'll send you an email. If you've got any further questions, please feel free to reach out to both Lewis and Andrew. I'm sure they'll do everything they can to support and help you all. Once again, thank you for joining us at the club. Again, feel free to hang out in our communities. Come speak to us about our membership. Come see us on the road in May. Thank you for joining us, and see you all again very soon.
Thank you.